Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are mixed today. Dow Jones is up 0.7%, Nasdaq is down 0.5%, S&P 500 is down 0.1%, and Russell 2000 is up more than 1%. Oil prices are at $64 per barrel. Yield curve is a bit more flatter. 5-year Treasury yield is up 3 basis points. 30-year is down 1 basis points. 10-year Treasury yield is at 4.04. Heading into the Fed meeting, we're going to talk about that later on. Wall Street mixed ahead of Fed's rate decision. Nvidia slips. I'm going to run our usual daily article and a few Tesla and company-specific news, and now we're going to do another Fed related live stream later today during the meeting, during the Fed press conference. So tune in for that as well. Wall Street's main indices were mixed in choppy trading on Wednesday, with the S&P 500 muted ahead of a widely expected interest rate cut from the Federal Reserve later in the day. The central bank is expected to reduce borrowing costs by at least 25 basis points at 2 p.m., a move priced in by investors after a series of economic indicators showed a weakening labor market. Markets will closely watch Chair Powell's speech as well as the dot plot projections to gauge the monetary policy outlook ahead. Traders are expecting a rate cut totaling about 68 basis points by the end of the year. The labor market has suffered quite a bit lately, and the symbolism of what the Fed publishes in terms of where they think going is going to be either buoying the market or disheartening. It's going to be magnified much more than any rate reduction. Meanwhile, Nvidia fell 2.3% after reports that China's internet regulator had instructed the country's biggest tech companies to stop buying all of AI leaders' chips. The stock weighed on the S&P 500 technology sector, which was down about 1%, dragged on the tech-heavy Nasdaq. A rise in the financial stocks such as American Express and Goldman Sachs boosted the Dow. A 1.6% decline in Tesla weighed on the consumer discretionary sector. The Fed meeting will be a test of Wall Street's recent rally, supported by rate cut expectations and revived enthusiasm around AI stock-linked trading. We're going to talk about all of this a little bit more. In other stocks, New Fortress Energy soared 32% after the company reached an agreement to supply liquefied natural gas to the Puerto Rican government. Workday gained 9% to top the benchmark index after activist investor Elite Management said on Tuesday it had built a stake of more than $2 billion in the human resources software provider. Interesting. I actually have an article coming up with a similar company. Maybe I'll take a look at that one too. Lyft jumped 14% on the news of Alphabet's Waymo would launch autonomous cab rides in Nashville next year in collaboration with the ride-hailing firm. Shares in the rival Uber fell 4.4%, landing at the bottom of the S&P 500. Let's dig into the NVIDIA news out of China this morning. That's kind of shaping up the market today. China bans top tech firms from buying NVIDIA chips, report says. China has reportedly banned its largest tech firms from buying NVIDIA AI chips, adding pressure to the U.S. chipmaker sales in the country. Shares of NVIDIA, which entered Wednesday's session up roughly a third this year, fell about 3% in recent trading following the news. The Cyberspace Administration of China, the country's internet regulator, told firms including TikTok owner ByteDance and an e-commerce giant Alibaba this week to end their testing and orders of the RTX Pro 6000D, the chip NVIDIA introduced in July for the Chinese market, according to the Financial Times. Beijing had concluded that homegrown chips are now performing on par with the NVIDIA chips allowed in China under export controls, the FT said, citing people familiar with the matter. ByteDance and Alibaba did not respond to a request for comment in time for publication. The Financial Times reports that the companies that started testing and verification work on the chip with NVIDIA server suppliers have since told their suppliers to stop the work. The new ban is stronger than prior guidance from regulators that focused on curbing use of the H20, an earlier version of NVIDIA's China-tailored AI chip, and comes after China recently accused NVIDIA of antitrust violations. Asked at a press conference in London about the reported ban, NVIDIA CEO Jensen Huang said he was disappointed. Huang is among U.S. tech executives accompanying President Trump on a state visit to the U.K. Quote, "We can only be in service of a market if a country wants us to be," Huang said, according to a transcript provided to Investopedia by the company. I'm disappointed with what I see, but they have larger agendas to work out between China and the US, and I'm patient about it. We'll continue to be supportive of the Chinese government and Chinese companies as they wish. NVIDIA faces US export restrictions on sales of its most advanced chips to China and has tailor made some of its semiconductors to the country's market. In August, Trump ended H-20 restrictions his administration had placed earlier in the year in exchange for a 15% share of revenues. NVIDIA's job is to serve those markets the best we can, if we can, Huang said. There are a lot of places we can't go to, and it's fine. Huang said he hasn't yet spoken to Trump about what's happened over the past few days, but I'll see him tonight and he'll probably ask me. I'll probably say something similar. Interesting. All right. In other news, XAI is losing some executives. And the latest one is OpenAI hires former XAI CFO Mike Liberator as business finance officer. So Mike jumped ship on XAI and hopped over to OpenAI, and he was a CFO, so that's a pretty big deal. OpenAI has hired Mike Liberator, former finance chief at Elon Musk's XAI, to be the AI startup's business finance officer, responsible for overseeing its AI infrastructure, a company spokesperson told Reuters on Tuesday. Liberator, who left XAI in July after just 3 months on the job, I mean, that's very significant as well. The CFO that XAI hired left XAI after 3 months. Will report to CFO Sarah Fryer and work with Greg Brock's team, which is charged with scaling OpenAI's access to compute, the spokesperson said. So the one indication here is that the CFO is leaving. Second indication, CFO is leaving after 3 months on the job. And then the third indication is that he's going to a position that's lower than CFO. There's a downgrade at OpenAI, but still a downgrade in terms of his career. So that's quite a signal. CNBC, which first reported the news, said Liberator will begin his role on Tuesday. Liberator, who is also a former Airbnb executive, was involved in XAI's $5 billion debt raise in June and a separate $5 billion strategic equity investment. Interesting. His appointment comes amid a rivalry between Musk's company and OpenAI, as well as a fierce battle among tech companies for AI talent. Musk and OpenAI co-founder had sued the company and its CEO Sam Altman last year for allegedly deviating from its original mission to benefit humanity. OpenAI countersued Musk in April for harassment. Yeah. It's harassment. It's amazing. Amazing. I don't know how OpenAI is not benefiting humanity. They're coming up to close to 1 billion users now, monthly active users. So I don't know what Elon has created that benefited 1 billion people. I don't think he has created anything actually that benefited that many people. He's kind of in the high millions of Tesla customers. He purchased XAI and it's actually worse now than it was when it was Twitter. It's actually cost money to a lot of people. And there are more bots than when it was Twitter. And it's basically just turned into a kind of like a misinformation machine for Elon's companies. Tesla under investigation for door handles that trap people inside. Tesla is under investigation for faulty electronic door handles that can trap people inside their vehicles. The NHTSA launched its probe saying it was responding to numerous complaints filed by Tesla owners with a particular focus on children who have been locked inside the vehicle without any way to get out. The news comes a few days after Bloomberg published a bombshell report about Tesla owners who have been seriously injured after becoming trapped in their vehicles after crashes. Tesla's door handles, which operate electronically and sit flush against the vehicle for improved aerodynamics, have been the source of some consternation for some time. China's government is considering banning electronic door handles for safety reasons. And now NHTSA says it's investigating instances in which Tesla's handles become inoperable as a result of low voltage battery problems. The investigation specifically focuses on an estimated 174,290 Model Y SUVs, though the regulator said the investigation could widen. Quote, this investigation will also assess the approach used by Tesla to supply power to the door locks and the reliability of the applicable power supplies. At this time, NHTSA's investigation is focused on the operability of the electronic door locks from the outside of the vehicle, as that circumstance is the only one in which there is no manual way to open the door. The agency will continue to monitor any reports of entrapment involving opening doors from the inside of the vehicle, and the Office of Defects Investigation will take further action as needed. NHTSA says its investigation was prompted by 9 instances of children becoming trapped inside a Tesla vehicle as a result of low voltage battery problems. Typically, parents were unable to reopen their Tesla's doors to retrieve their children from the backseat. Tesla's vehicles contain manual door releases, but the agency notes that certain people, especially children, may not be able to operate them. Quote, entrapment in a vehicle is particularly concerning in emergency situations, such as when children are entrapped in a hot vehicle, the agency stated. This is the latest investigation to target Tesla. The company is also being examined for failing to report crashes involving its partially autonomous driving technology in a timely manner and for its remote parking feature after several crash incidents were reported. Yeah. So instead of creating lawfare, meaningless lawfare against OpenAI, which is actually moving humanity forward, maybe Elon Musk should focus on Tesla and fixing this door problem. Lyft stock surges 12% on Waymo robotaxi deal in Nashville. Lyft stock surged roughly 11% midday Wednesday after the company announced a partnership with Alphabet's self-driving Waymo service to roll out an autonomous ride-hailing service in Nashville next year. Riders can initially hail driverless cars through the Waymo app, with plans to integrate the fleet into Lyft's platform later in 2026. The collaboration is significant, given that Waymo also has deals in place with Lyft's rival Uber for its robotaxis in Atlanta and Austin. Uber shares were down about 5% following the announcement on Wednesday morning. The robotaxi race has accelerated this year. Tesla began testing the service in Austin this summer with plans to eventually expand to Nevada, Arizona, and Florida. Amazon, back to Zoox, also has limited testing in San Francisco and Las Vegas. Waymo has been leading the race, providing paid robotaxi rides to customers in San Francisco, Phoenix, Los Angeles, and Austin. Waymo co-CEO Tekendra Mawankana said in a press release that the deal was a part of a gradual rollout as the company continues to scale Waymo's ride-hailing service to more people and more places. At stake is a huge opportunity for companies like Waymo, Tesla, and others. Goldman analyst Mark Delaney estimates the market for traditional ride-hailing in the U.S. is worth approximately $58 billion currently. It could be worth more than $330 billion by 2030, with robotaxi-type services pushing the industry forward and reducing costs by, among other factors, not requiring a human driver. For Lyft, the Waymo partnership could help the company better compete with Uber and Tesla as it sidesteps building the autonomous technology in-house, a costly and risky prospect, particularly if AV expansion stalls. Still, Lyft faces other challenges. In a note to clients, Evercore ISI analyst Mark Mahaney reiterated an in-line rating after Lyft's mixed second quarter results, calling the key question the company's ability to sustain top-line growth while ramping profitability. We see Lyft's valuation as very reasonable, Mahaney said. Even so, the firm would like to see positive fundamental trends sustained over time to become constructive on the shares. Lyft stock is up 70% year to date versus Uber's 48% rise during the same period. Uber's market cap, however, is $195 billion, dwarfing Lyft's $9 billion valuation. Switching to another company, Amazon. Amazon spends $1 billion to increase pay and lower healthcare costs for U.S. workers. Amazon, a lot of people hate Amazon because it's a big company and kind of beating the small guys and everything, but they actually looks like they treat their workers pretty well, as far as I can tell. Amazon says it's making a $1 billion investment to raise wages and lower the cost of healthcare plans in the U.S., fulfillment and transportation workers. The Seattle-based company said Wednesday the average pay is increasing to more than $23 an hour and said that some of its most tenured employees will see an increase between $1.10 and $1.90 per hour. Full-time employees, on average, will see their pay increase by $1,600 per year. Amazon also said it was lowering the cost of its entry healthcare plan to $5 a week and $5 for copay starting next year. Amazon said they will reduce weekly contributions by 34% and copays by 87% for primary care, mental health, and most non-specialist visits for employees using the basic plan. Amazon has a global workforce of 1.5 million workers, and I think about 1 million of those are in the US. Last December, 7 Amazon facilities went on strike, an effort by Teamsters Union to pressure the e-commerce company for a labor agreement during a key shopping period. That same month, Amazon reached a settlement with the Occupational Safety and Health Administration, OSHA, that requires the online behemoth to adopt corporate-wide ergonomic measures at facilities across the country. The agency claimed hazardous working conditions led to serious lower back and other musculoskeletal disorders at Amazon facilities. We're going to read the summary on this one. BlackRock's $185 billion model makers are amping up stock bets. BlackRock is increasing its exposure to US equities and AI within its $185 billion model portfolio platform. The asset manager is shifting allocations from international developed stocks to US stocks, driven by strong US earnings growth and expectations of a Federal Reserve interest rate cut. This move reflects confidence in the US equity rally and the potential for continued growth. Actually, let's read the detail on this. The world's biggest asset manager is turning up the risk dial by doubling down on US equities and artificial intelligence exposure across its $185 billion model portfolio platform, according to an investment outlook viewed by Bloomberg. Best-in-class U.S. earnings performance has BlackRock upping its exposure to U.S. stocks at the expense of international developed stocks in its model suite, the outlook showed. After the changes, the portfolios are now 2% overweight equities. Billions of dollars flowed between corresponding BlackRock ETFs on Tuesday as the asset manager adjusted its allocation, data compiled by Bloomberg shows. BlackRock's model reshuffling is a vote of confidence in an equity rally that has taken S&P 500 to all-time highs this year, buoyed by enthusiasm over AI spending and building bets on a Federal Reserve interest rate cutting cycle, which is expected to kick off on Wednesday. Corporate America's relative earnings strength should propel the U.S. stock market, according to BlackRock's investment letter, which points out that the U.S. has produced 11% earnings growth since the third quarter of 2024 versus less than 2% for its developed market peers. The U.S. equity market continues to stand alone in terms of earnings delivery, sales growth, and sustainable trends in analyst estimates and revisions. Michael Gates, lead portfolio manager for BlackRock's target allocation ETF model portfolios, wrote in the letter. Developed markets ex-U.S. lack of competitiveness in terms of earnings and sales delivery, especially trends in sales growth. Model portfolios, which package together funds into ready-made strategies to sell to financial advisors, have ballooned in size in recent years. BlackRock alone commands about $185 billion in model assets, up from roughly $150 billion earlier this year. Tweaks to allocations can spur massive inflows and outflows among products. Roughly $3.4 billion flowed into the iShares S&P 100 ETF on Tuesday, the fund's biggest one-day influx ever. While the iShares Core S&P 500 ETF and the iShares US Equity Factor Rotation Active ETF absorbed $2.3 billion and nearly $2 billion respectively, according to data compiled by Bloomberg. BlackRock's model team is also leaning in to the AI build-out and is shifting from offering exposure to its broad-based US tech ETF to an AI-focused fund, according to the commentary. Nearly $1.4 billion flowed into the iShares AI Innovation and Tech Active ETF on Tuesday, while the iShares US Technology ETF lost $2.7 billion. Now, in an hour or so, we're going to get the Fed decision, and then that's going to be followed by a press conference. I'm going to have a live stream of the press conference, and we're going to talk about, maybe start at 5-10 minutes, talk about the decision, and then where it's going afterwards, make some predictions for the conference, and we'll see how that goes. So with that in mind, Fed set to make its first rate cut of 2025. The Federal Reserve is widely expected to trim its benchmark interest rate by a quarter percentage point on Wednesday afternoon, while giving investors new clues about how many more cuts could occur during the remainder of the year. Markets are looking for a 25 basis point reduction in the first 2025, followed by similar size cuts at the last Fed policy meetings of the year in late October and early December. How many cuts central bankers envision for the rest of 2025 will come in the form of the Fed's dot plot, a chart updated quarterly that shows each official's prediction about the direction of the central bank's benchmark interest rate. The last dot plot, released in June, revealed a consensus among Fed officials for 2 cuts this year amid uncertainties about how the Trump administration's policies on tariffs, immigration, and taxes would impact the economy. The question is whether policymakers will stick with that prediction, with inflation still running a full percentage point above their 2% target, or get more aggressive about easing monetary policy amid signs of labor market weakness. Matthew Luzetti, chief U.S. economist for Deutsche Bank, said a path for more rate cuts would likely be driven by risk management considerations, with greater downside risks to the labor market and more limited upside risks to inflation. Luzetti expects 3 cuts in total this year, with little change to Fed's official economic outlook for slow growth and higher inflation and modestly higher unemployment. Wilmer Stitt, a bond portfolio manager for William Trust, said he thinks it's more one end wait and see. He thinks the Fed still is concerned about inflation and that the deterioration seen in the labor market this summer is not enough for them to cut further this year. Just take a look at the fact that financial conditions are doing very well, Stitt said. Unemployment has its issues, payroll growth in particular, but when you balance where CPI or core PCE is, I think that should give them a little hesitation. Another key issue for investors today is how divided the Fed is over the size of today's cut, as well as the path forward. The newest addition to the Fed board, White House advisor Stephen Miron, likely favors a larger cut than 25 basis points. Another Fed governor appointed by Trump, Christopher Waller, has said that any weakness in the August job report could lead him to sport a bigger cut. Eric Trump on what the Fed rate cut means for crypto. Crypto bull Eric Trump says a Fed Reserve rate cut, which his father, President Trump, has been clamoring for, could give crypto prices a big boost. I just think you would potentially see this thing skyrocket, Trump told Yahoo Finance, adding that because of crypto's seasonality, there's particular room for crypto growth in the fourth quarter. His crypto miner, American Bitcoin, also backed by brother Donald Trump Jr., debuted on the NASDAQ in early September after a merger with Griffin Digital Mining. Trump added that lower borrowing costs would free up cash for riskier bets. Fed Chair Jerome Powell is widely expected to lower rates by 25 basis points, though the path for additional cuts remains unclear. A cut would reduce the appeal of safe, interest-bearing assets, pushing investors towards stocks and speculative trades like Bitcoin. Historically, crypto has rallied after easing cycles, but not in a straight line. While a cut might spark short-term rallies, it may also signal a weaker economy, which could weigh on the riskier assets. Trump said longtime skeptics are now becoming crypto converters, citing large private wealth management firms. He recalled a friend in private wealth management who once dismissed Bitcoin in favor of treasuries, but has since urged clients to add more crypto exposure. These people are falling, and they're falling quickly, and you better believe it's going to pour gas on this whole environment, whole movement, Trump said. On that note, thank you very much, everybody, and I will see you in about an hour, and take care.